Welcome back to our weekly update. This is Pascal Corcus with KOR Capital Fund. I'm here to update you on the economy and current conditions for investing and tax. This week we're going to be talking about AOC's comments regarding taxing the rich. Some frequently asked questions, and I'll be giving my opinion as a tax strategist on what my thoughts are on the validity of those questions and comments. So Hannah, what is the first question?
What is the percentage of collected taxes in the upper 1%?
The exact percentage, I'm not sure, but it's not very much. The 1% don't pay very much in taxes, specifically because the tax code is not set up for them to pay a lot of taxes. The tax code is currently set up to manipulate the citizens in a country to function in a way that the government is going to benefit. So providing housing and providing jobs, providing energy. Those are the reasons that we focus on the companies and the strategies that our investment firm focuses on. Because if we provide housing, energy, and jobs, we will get significant tax credits. This is the goal that the government wanted from its citizens, since it does not want to be in the energy, housing, and employment industry.
I have been told the rich don't pay a lot in taxes. Is this true? If so, why?
So the top 1% are following the rules the same as everybody else. The top 1% play by the same rules. And we have our tax code. Most of the tax code is regarding credits and deductions. So what the government wants to do is incentivize its citizens to act in a way where the country benefits overall. And because the top 1% has the additional income and assets to deploy, they are putting their money into the things that the government needs assistance with. For example, additional housing, energy production, and employment. And when you offer additional employment, energy, or housing, you get tax credits because it's assisting the country. So it's incentivizing the citizens of a country to assist in the needed areas. That is why they're getting tax credits. That is why it doesn't look like they're paying that much in taxes. What ends up happening is they're deploying their money in areas that are less profitable, but because they're deploying it in an area that's less profitable, the government is giving them a tax credit. This is an example of how. The rich would be investing in upper middle class housing, which is very profitable. But instead, they provide low-income housing that offers them tax credits. The government wants low-income housing, so there's more people that can find quality homes at a lower budget. Now, because they're offering low-income housing, the government offers them tax credits. So the amount of tax that they would have paid is offset by these credits that the government is providing, since the rich chose to provide lower income housing, which is less profitable, compared to what they would have chosen is higher upper middle class housing, which is more profitable. So because the rich chose to provide low income housing, which is needed in this country, the government incentivized them with tax credits. And that's how the government manipulates its citizens to act in a way that the government benefits or the country benefits. And that's how the low income housing credit is helping people and helping the investors that put their money out that way. The number one reason that people continue to offer low-income housing is because of the low-income housing credit. That is a major incentive for people to provide low-income housing. Otherwise, if you actually look at the profitability of providing low-income housing without the credit, it's not very profitable. It's more profitable to provide upper middle class housing because the return on investment is higher. Because if I'm going to build a 1,000 square foot apartment and I can rent that 1,000 square foot apartment for say $1,000, or I can make it a luxury apartment complex and rent it out for $2,000 or $2,500, obviously we're still providing the same shell. It's just the finishes and the amenities that make it worth more. The profit is in the fixtures and amenities. So it's not as profitable to provide low-income housing, but people still do it because the government offers tax credits, which then the rich will take those tax credits and reduce the amount of money they owe in taxes. Now, they could have provided more middle income, higher income housing, But instead, they offered low-income housing since they made up for their difference in profit with the tax credits. So that is how they're getting the credits, and that's why the government's offering them. In the government's eyes, it's actually fair. Because it doesn't matter if you're a Democrat or a Republican. This is being used by both sides to manipulate the people, and manipulate sounds somewhat of a harsh term, but it is manipulating people to function in a way that the government benefits and the people benefit.
The average American is paying between 20 to 30% in income taxes depending on income. The ultra wealthy are paying between 15 to 20% on revenue generated from interest from banking and investments.
So to answer that question, either American A and American B, let's ignore how much money they make. They both can have the same way of being taxed. The rules are common across the board, where if you invest in this way, you get this tax bracket. If you make money a different way, you're taxed differently. So all Americans can benefit from this. So like my clients from my accounting firm, the goal is to have them receive their income in such a way that it's at a lower tax compared to if you are not focused on how you're receiving your income, you can be stuck paying a higher tax. So yes, American A and American B can both have the same amount of income but be taxed differently. Now, this is why you need a tax preparer that is great with strategy. Not every tax preparer is going to be able to help you with strategizing how to lower your taxes. And two, not every American is willing to get help. There's so many people out there that do their own taxes. And yet the IRS came out and said most Americans are overpaying on their taxes or not receiving as much of a refund as they could have if they did it properly. So it's not the fault of American B who chose to get really good professional advice, and that person paid, thousands of dollars to get their taxes prepared, but that thousands of dollars saved them tens of thousands on their taxes. I have one client, she was getting one CPA preparing her taxes, and she was sending in roughly 10, 20, 30,000 a year extra on top of her W-2 tax. So last year she paid, I think, $72,000 in income in total between her paycheck and what she mailed to the IRS. When we did her taxes, she actually got a return of, I think, $30,000. They sent her $30,000. We really followed the tax code. We used all the rules. We didn't perform magic. We followed the rules and got her every single deduction and credit possible per her situation. And we looked at her current year situation and we say, hey, 2022, you're gonna have a problem unless you start tweaking what you're doing right now and preparing yourself to change what you're doing, because you have another tax hurdle that's gonna be coming up. So you need to start working on that today in this year before you have the problem next year. And that comes with strategy, planning. And if you get the right people on your team, you can win. Now, this is another analogy, but I'm in Tampa, and the Tampa Bay Bucks haven't been doing very well. But what did they do? They brought in Brady, which is basically one of the largest factors, and Gronkowski, and now we're winning Super Bowls. So if you change the key players on your team, and your tax accountant is a key player on your team, they can have you basically do the same thing you've been doing, but change your strategy in such a way where it would dramatically reduce the amount of tax you have to pay. That's possible. But it's up to you to go out there and add those people to your team.
Follow up with that is it fair to say that you said, when was it, Group A or Group B?
Yeah, American A, American B, yeah.
American A, let's say, is in the top 1%, or you said American B is in the top 1%. American A, actually I don't know.
American B is in the top 1%, but it has a great tax accountant. American A is also making the same amount of money, but doesn't. He's gonna pay more than American B.
Okay, and does these tax codes and things, obviously it's with incentives or something like that, investments. So the average American who doesn't have an investment, does that mean they don't really have a tax credit, or like there's no way for them to get a tax credit? Or
no, I mean, when I was making what was it, 23,000, 24,000 a year, working for the bank as a teller. I was getting paid like $11 an hour. I bought my first duplex. I was 19 years old, and I rented out one side, lived in one side, depreciated part of the building, eventually moved out 6 months later, depreciated the whole building, had the depreciation right off my income that I was making at the bank, and I was also going to college. So I got the credit for going to college, I got the credit for depreciating my building, and I was still bringing in money from the working and from my rental property, and yet I didn't really pay any taxes. I was not making hundreds of thousands of dollars. I wasn't even making $25,000, but I was able to get that. You're able to get that. Now, it doesn't matter if you're worth $1 billion. You don't have to be a billionaire to get these credits. You don't even have to be a millionaire to get these credits. Most people that become a millionaire never make 6 figures. It's roughly 2/3 of all millionaires never made 6 figures in 1 year. So people think you have to be rich to become rich. That's actually false. You can become rich at any income by working hard, working smart, and being tax smart. Now, to finalize everything that we're saying, like with AOC saying we need to tax the rich and take from the rich, the reality is the money we pay in tax barely touches the national debt, barely goes towards anything that truly benefits this country. The issue that's happening, why the poor are getting poor, is inflation. The government keeps on printing more money, which is a hidden tax. It's taking money from you, and it's making the purchasing power of every dollar you have worth less. That is the reason why the poor get poorer, because as they print more money, assets grow. It is not the rich not paying taxes. The government can technically print their way out of all debt and adjust everything with the current way they're doing things. The problem is most of the money they print goes towards fat, doesn't help the people, and they keep on devaluating the currency, which is making the poor more poor, and it has the assets of the rich grow. So my focus is to show people how to get their own assets and get their own discounts and credits so they can reduce the amount of tax they pay while having the ability to grow their wealth. And that's the only way that I found for true financial freedom. Setting yourself up in a position where even if the government keeps on printing, because the truth is, it doesn't matter if it's a Democrat or Republican, to keep printing money, where you can set yourself up that even if they do print, you're in a position to still win, or at least not lose, because a lot of Americans that are savers, as Robert Kiyosaki says, savers are losers. And it's unfortunate, but it's true. We're not in 1970s. We're not in the 1980s. We're not where we are in a gold standard where savers win. We're not there. Right now, we're in a fiat currency. Savers are losers. It's unfortunate, but this is kind of the current reality we're in. At least if you're saving in dollars. If you're saving in other asset classes, then it's a whole nother conversation.
Warren Buffett is one of the richest men in the world, yet he pays a lower percentage of taxes than his secretary. And even he said that was ridiculous himself, that we shouldn't, and then this person adds, we shouldn't defend billionaires with more money. They're not even willing to raise wages for their employees while inflation and cost of living rises dramatically. The billionaires just keep getting richer, and they're just pocketing extra profit like Elon Musk and Jeff Bezos.
It's like a blended comment, and they're just very blanket. So let's look at the facts. If you have investment income is at a lower bracket for long-term capital gains. Long-term capital gains is at a 15%. And this secretary, if she invested in stock and had a long-term capital gains, she would have the same bracket as Warren Buffett. It doesn't matter how much she makes or he makes. Now again, his is going to be at a higher income, so it will be higher than hers, where she might be at a 15% and he might be at like a 20 or 25%. But the point is, they are level in the sense of taxation with the same income that's being brought in. Now, if Warren Buffett had earned income and she had earned income, they both would be having the same taxation, where each amount of money they made would be the same. If his earned income was higher than her earned income, he would be paying a higher tax bracket. The reason Warren Buffett overall, his average tax percentage is lower than hers is because he is mostly having investment income, where most of her income is earned income. Now, she could have a lower tax bracket. In my example, where I was I was actually 19 years old, but I made $23,000 to $25,000 that year. Because I had real estate investment income with depreciation from that, my effective tax was zero. I didn't pay earned income. I paid basically zero earned income tax. I did pay Social Security and Medicare because I was an employee. Now, that argument has some sense in the sense of, well, it doesn't seem like it's fair. But in my argument, it would be like, how to make it fair is charge the employee less tax, not charge the company more tax. Because if you're charging the employee less tax, that means the employee will keep more of their money, because the government is taking roughly it's like 7.6% from the employee and 7.6% from the business owner, that the employee never even sees that the business owner pays for them. So if we said, all right, we're no longer taking Social Security and Medicare, we're just going to give it all to the people, you keep that extra 15%, then the employee would have more money. I have given, at least personally, I can't speak for all people, I have given all my employees raises. So I am giving them raises, especially since we had this significant inflation. I give all my employees an inflation raise. So we can't blanket say all billionaires are bad. And as I said earlier and explained, how are these individuals getting such significant tax credits? It's because they're doing something the government wants them to do. An example of Elon Musk, he's doing a lot of R&D, research and development. If he didn't do this R&D and spend all this money and have these losses that he could hopefully eventually find a product he can sell, the government would have to end up spending all the tax money and giving it to universities to do R&D. So it'd rather have a company do R&D and avoid the government just paying out money to a university. So in that sense, they're doing something to get these discounts. I do agree that we should have better wages in this country. But taxing the rich isn't gonna fix the problem. The problem is our education system. We should be putting people in a position to study for jobs that will be available when they get out of school, and not get degrees that cost them $80,000 for a job that might be available, and if it is available, it only pays $35,000 a year. That's the problem. We really need to be focusing on having a solution to the problem. And the real solution is we are not educating people in the jobs that are needed. We're going to do this, what is it? The infrastructure. The infrastructure bill. It's like $3 trillion. The problem is most of it's fat. It doesn't actually help the people. Two, we only have a certain amount of people that can work with their hands in this country. If you put $1 trillion in a new space, all you're going to take is a working class people that can work with their hands, get them out of one industry, go to another industry. What that's going to do is make the other industry suffer. To fix the problem is we need to have we need to have additional education to help people with their hands to learn these skills. They'll come out of school getting paid $50,000, $80,000, $100,000 a year. Now we'll have enough people to work with their hands, and it'll actually fix multiple problems in addition to the psychological problem, the drug and alcohol problem we have in this country. Because when people don't have an ability to work with their hands, that they might not have the skill set to work in an office, we're now providing them an opportunity to exercise themselves in a way where they're a productive member of society. They're making money, supporting their family. They're not they don't feel bad because they feel like they're a burden to society, but yet they're a useful, functional person if we were able to help them effectively. And how we do that is providing them a quality job and a way to earn their living. It's been proven when you're handing people out money, they feel less. People like working and earning their way. And by doing that, we're helping more people. Now, it is not one item is gonna fix everything. Obviously, to do everything that I mentioned, it's gonna take time and it's gonna take a lot of focus. But I believe that's really gonna truly fix the problem. Not taking more money from the rich, handing it out to people that can't really do much with it. Because all you're doing is causing more inflation, which is causing a bigger problem with no solution at the end. So I'm figuring out this is a solution that will have a ripple effect with multiple additional solutions along the way, solving multiple problems down the line. That's my 2 cents.